So Ren, at the top, you spoke about the rebound that we've just experienced and how we're almost at all-time highs. So we thought it was a good reminder to revisit how the stock market is the greatest wealth creating machine in history, despite the wall of worry that it has faced time and time again over the last 100 plus years.
Yeah, now there's two parts to this segment that we want to do. The first is, I guess, short term, and then we want to zoom out a little bit. But let's start short term because over the past 5 years, there's been plenty of reasons to panic. COVID, obviously, Russia invading Ukraine, inflation hitting 7.9% in Australia or 7.8%, the war in the Middle East, the slowing economy, the cost of living crisis. Have I missed anything?
Not making the finals year on year.
China's continued economic slowdown.
Yes, China bombing out.
The collapse of the iron ore price and the lithium price and the nickel price, like a lot of Australian minerals. There is a lot of reasons to panic.
Yes.
But in that time, in the past 5 years, the ASX 200 accumulation index, which is an index that measures the ASX 200 with dividends reinvested, up 48%.
Nice.
Despite the COVID crash, despite the fall in 2022, 2023, just the vanilla ASX 200 with dividends reinvested, $100 invested is now $150.
This is just a bulldozer that continues to smash through any wall of worry.
Yeah.
It's like that meme with the train. You know, the meme
I know what
with
you're
the
saying.
train.
Yeah, keep going, yeah.
We'll leave it there.
It's like the bus parked on the tracks is worry.
The bus parked on the tracks is worry.
And then the ASX 200 is okay.
Yeah. We'll get that up on our socials.
Please go to our Instagram and like it because we're going to
That'll
need...
be the first and last time I'll ever speak about a meme on this show.
No, you got to keep doing it. But look, we wanted to zoom out a little bit more because that narrative applies the longer you zoom out as well. So let's zoom out a long way. 122 years because Market Index have the Australian All Ordinaries Index going back to 1900.
Nice.
So 1900 to 2023, what do you think the stock market has done annually on average?
I know the answer to this.
Okay, why don't you
because
tell
we've
us?
been rinsing it for years. 13.2%.
13.2%.
On average. It's unbelievable. 13.2%.
And that is climbing a wall of worry. 2 global pandemics, 2 world wars, plenty of smaller wars, a prime minister going missing, a prime minister being dismissed, companies collapsing.
You name it.
Yeah. So let's zoom in on some of the insights that we can learn from this data, and we'll include the source in the show notes as well, so you can look at it yourself. But what can we learn?
I think the first learning is the negative headlines always outweigh the positive in everyone's minds, but the stats are different. 23 negative years out of those 122, so 19%. 99 positive years, 81%. A great reminder of the reason to stay invested. If you try and play the market, you will miss some of those years. The worst year was 2008, down 40%, global financial crisis, no surprises there. The second worst year was 1930, down 28%.
Great Depression. Yeah.
The best year was 1983, up 67%, but that came after 2 down years, 1981 and 1982. Similar, the second best year was 1975, up 66%. That came after 73 and 74, which were both down years.
So if we just reflect on that for a second, 81 and 82 both down, and then 83 best year ever. 73 and 74 both down. 75 second best year ever. This is like the peril of trying to time the market because so many people try and get out on the way down and say, I'll wait until it's better to get back in.
Yeah.
But whether it's a short, sharp correction like we saw, this month, or, the COVID rebound was super quick. But even here, it's like you have 2 years of down. So you're waiting, you're piling up your cash, sitting on the sideline, and then bang. It rips. And you never know that it's ripping until you're in it.
Yeah.
And so many people miss the recovery. Yeah. And that's a real problem.
Yeah.
And
not only the recovery, the best 2 years in 122.
Yeah.
Like,
And to put that in context, so inflation peaked in Australia at like 17.5%, I think 17.7% in 1975. So it's not like people were thinking economic conditions are good, the market's going to rip. Inflation is incredibly high. Like think about what we were like when it was 7.8%. We didn't know that was the peak. We didn't know we were out of the woods. We felt like we were in the shit. It's only in hindsight you look back and you were like, that would have been a good time to invest.
Yeah.
And that is the story over and over again. And that is why we say it's such a difficult thing and such a perilous thing to try and time the market.
Yeah, stay invested. So those are the highlights, but there are some surprising positive years among those 99. So World War I, 1914, 1917 and 1918 were actually positive years.
You wouldn't think that.
You wouldn't think that. World War II, 1939, 40, 42, 43, 44 and 45 were positive years. Wouldn't think that. Harold Holt goes missing.
Yeah, 1967.
Up 43%.
Yeah.
Whitlam dismissed in 1975, market up 63%. They love that. Quintex collapse. Now, this was one of Christopher Skase's companies.
I think
the company.
Yeah.
That was in 1989. The market was up 17%. And in 2001, HIH, which was the largest corporate collapse in Australian history, and also OneTel, the market was up 10%.
Yeah.
So
and
despite
also
all of that.
9/11, I guess, at the end of the year.
The world wars really surprised me. Economic activity, perhaps. I'm not sure.
Well, yeah, people say like war is good for business
Yeah.
and all of that stuff. And,
Yeah.
especially in a situation like that, like you very quickly get to total employment and total,
Everyone's
the whole economy becomes
is active.
Yeah. But I think the point we're trying to make here is that the history of the stock market is a history of climbing a wall of worry. And companies collapse, prime ministers get dismissed or go missing, wars happen, inflation spikes. There's always a reason not to invest. There's always a reason to wait. I think I used this example on the podcast recently, but I'm going to recycle it. Warren Buffett's dad only invested in gold because he was so worried about the US economy and the US dollar. What did he miss out on? And then compare that to what his son has done by just backing, in his case, his home country, like America's entrepreneurial spirit and enterprise.
Yeah.
It's just
Stay invested.
Stay invested.
Stay invested.
Yeah. I think we
Forget
made that
the
point.
noise
Yeah.
and let's move on.
Equity mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful